Last week in our analysis for gold, we discussed that gold is about to form a symmetrical formation. You can see these two candles identical. We can expect a identical candle, and precisely that has happened. Also, one more beautiful thing is look at the lows beautifully aligned. This is what the beauty of the analysis is. At the same time, look at the highs. All three highs beautifully aligned here. Now, what to expect next week? Is it going to rise till this and break out beyond? Or is it going to retrace again on the downside? Which position you should take trading gold next week? We will see with the help of charts first, followed with indicators. Towards the end, I will give you the trading levels and strategy. Most important, do watch till the end. And do not forget to like, share, subscribe and comment. And do not forget to press the bell icon which keeps you updated with the twice a day analysis which I share for gold. Definitely it will help you in your day trading decisions. Do watch both the analysis. First I release with the Asia session. Next I release with the US session. 2 analysis in a day. Do watch that also. Let's start. Now couple of observations to share here on the candlestick charts. This is the weekly chart here. First of all, on the weekly charts you can see these two highs and this high all beautifully aligned. Gold failed to break past the highs of this channel, and next you can see these two candles. So this is the next high, which means for the next week you have to be observant till the time gold stays below 1975 levels. 1970-75 greater resistance is there. Now what could happen possibly is, see, also one more observation here is, look what has happened here. All the three lows beautifully aligned here. This is clearly implied bullishness. Second is almost symmetrical formation. Now symmetrical formation, which means this candle and now this candle can be expected, possibly yes, which means higher highs and then a pullback. And this also makes 1970-75 as a greater resistance here. Now next point to talk about is the wick it has left on the upside. The gold is traded bullish. It has left a wick on the upside, which means, as far as I am concerned, as far as my understanding for the charts are concerned, that it can open flat, continue with the bullish momentum. First thing is I will observe how it behaves at around 1965. Next I will observe how it behaves at around 70-75 zone, and then this zone is the most important, because if it stays above 1984, certainly we are going to look at a very sharp rise from here. Now what it is trying to do. Now look at the weekly charts in a broader. Now first observation on the long term chart is the triple bottom which we had seen. Since then gold traded in this bullish channel, rise, retracement, rise, retracement. Now few weeks back, 4 weeks back, it has breached this channel and dropped on the downside. Now that was a breach of the bullish channel, and since then we have seen a little bearishness. But now what it is trying to do, it is reversed from here. The next resistance which appears possibly is 2000 levels, which is also the bottom of this channel, because what it is trying to do, achieving the highs, lows, and now it is aiming for a further high. If it continues above 2000, you can say more bullishness can be expected in gold. Remember this fact, more bullishness can be expected in gold staying above 2000 levels. So till 2000 we have got few resistance levels. Definitely as and when each and every milestone is getting passed, certainly the bullishness or the bulls will increase in gold. Now let me share a near term perspective, that is on the long run. Now look at this. This is the retracement here, and if you look at the sharpness here, 3 red candles, since then now gold has given this sideways or this bearish channel. So you can say that because these are, you can say, channel with a bearishness or you can say negative slope, and this increases the chance that till the time gold respects these levels here, you can say possibility of a reversal will also exist. However, once it breaks past this zone at 80-85, chances are till 2000 and beyond that, sky is the limit on the upside. It will try to continue on the upside till towards the top of this channel, which is far above here. Whence one has to remain cautious and watch. See how much more we can observe from just one chart. Now let's have a look at the daily charts. Now look at the daily chart. See the consolidation which we have seen at around this zone, that is 1900 to 1925-30 levels. A good enough consolidation is seen before it gave a breakout. But it was a very clear indication that it is going to give a breakout because it has consolidated here for long. Now what has happened, it has come till towards this zone, which is also greater resistance zone. And just look at the last couple of candles. You can observe double top and lower lows, which also is indicative of a flat top and expanding bearishness. Now increasing bearishness here, possibly what it could try to do, couple of red candles here till towards 1940 and then a pullback. This is also very much possible. Now as we discussed, till the time it respects, and now on the downside you can see 1940 levels, definitely a greater support. 1925 levels, the next support levels. Till here gold is going to get maximum support, and I will not treat this as bearish till the time gold respects 1920. Remember this fact, till the time gold respects 1920 we are not going to treat this as bearish. Now on the downside, one more point to observe, when this candle has started, this was the day with the inflation data, and this candle specifically has seen a liquidity gap with the inflation data release. So the possibility for it to cover up here exists. Possibly within a couple of candles it can try to at max retrace till towards these levels before looking upwards. Now also one thing is making me cautious is the double top levels here, and hence breaching this, certainly more bullish momentum is going to be seen. So on the downside till 1920 the bearishness is not much. Now coming to the monthly charts. On the monthly charts you can see this formation, higher lows, higher highs here. This is still a bullish channel, point number one. Point number two is, see, couple of green candles, pullback candles. Now here one thing to remember is that after this reversal it is shown increasing body size. Now increasing body size is an indication of increasing bearishness, which means that there could be a third candle which could try to take it further down. The possibility exists for this. But this is only possible when in the month of July you see gold trading below 1895, 1890 levels. If yes, then gold is going to crash strongly. This point you should keep a note of. Second point, what it has done on the monthly chart so far is lower highs, higher lows. I will specifically wait for it to give it higher highs, higher lows. Till 2000 it has got maximum resistance. Breaking about 2000, you can treat this for a reversal and you can expect a stronger bullish momentum from here, continuing in this bullish channel. The highs of this channel now are about 2100 levels. You have to keep a note of it. Also if you look at the monthly chart, see, this is the bullish flag in which it was trading. So far it has tried to breach, failing to do so, again got a pullback. But a breakout is what one can expect again. If it does, certainly more bullish momentum can be seen in gold in the coming months. So now we have seen on the downside there are supports, very strong supports till 1920 levels, and then 1900, 1895, the strongest support zone there. If it breaks below, then certainly that is the point below which you should just close your eyes and stay short. Possibly more bearishness below 1895-90 zone can be expected, where we may see 1850-1840 levels in the month of July itself. Now this is on the charts alone. Let's have a look with the help of indicators. Now those who refer Fibonacci, you can see this is the peak here, bottom we have taken here on the monthly charts. And if you look at the formation, you can see earlier the previous month candle breaching below the critical support at 1904, which is the Fibonacci level of 38.2%. And now this candle possibly is trying to bounce back till towards this zone at 1972. Now this also, beyond this, definitely we can expect it to break on the upside, and then further bullish momentum may continue. Now coming to the monthly charts here, the indicators on the monthly charts, you can see 20 months average, the Ichimoku cloud average, everything is now based at 1850, 1840 levels. This is on the monthly charts. And on the downside, the 50 period moving average is now very far below, and it is still trading bullish. On the monthly charts, stochastic has dropped, looking downwards. But look at MACD. See, MACD, we have discussed this several times. It has crossed over here, and this is the crossover which we had seen in the year beginning here. Also remember, this crossover is happening after a long while here on the bullish side, almost after a couple of years or more. Now see, this is trading with divergence. This is still bullish. It can continue with the bullish momentum. RSI is flat near to top. Now coming to the weekly chart. Now on the weekly charts, 1960, very strong resistance exists here, not only from the 20 weeks average, not only from the Ichimoku cloud, but if you see the charts also, we have seen it getting very strong resistance here at 1960, 1965 levels. Very good resistance exists here. Now on the stochastic part, see it was at bottom, it is now looking upwards, trying to stay bullish. The MACD, which is so far, you can see after this crossover, traded bearish, now looking to converge. But remember, see, this is the first wave, this is the second wave, it is not yet crossed over. Only thing is, I will wait for a crossover. If it does, certainly you can say this should be a reversal, and then gold is going to remain bullish for the next few weeks or so. RSI is rising, staying bullish. Coming to the daily chart. Now look at the daily charts. On the daily charts, one point to note here is that last couple of candles were outside Bollinger Bands, and that is what we can see a pullback here. Yes, it stayed within the range and it traded with a slight bearish bias. Next observation is, see the 50 and 100 period exponential moving average, and the second is the 20 period moving average and the Ichimoku lines coming at 1930-35 zone. So you can see starting from 1945 to 1930, very strong support here, and then the simple moving average is coming together at 1925. So now these levels are very difficult for gold to break past by till the time it stays above this levels 1925, and then we have seen the lower of the trend line at 1920. Till the time gold respects these levels, we should not treat gold as bearish. Remember these words. Also, now if you look at the exponential moving average, it has started to curve upwards, bullish sign. 50 and 100 period also start to converge, bullish sign here. But one point is the stochastic on the daily charts, which is staying overbought. It can continue though, but couple of red candles may try to cool down a bit, because see, rise retracement possibly, and from there the ultimate rise will come later. Now look at MACD. See, MACD has crossed over at bottom. Now it is trading with divergence and trading bullish. Also, if you look at, now it has seen good enough divergence, though it is not the case that it cannot continue till this peak, but right now I think it is willing to converge a bit. So couple of candles of conversion, and then possibly from there it should continue to diverge. So there is a probability that for next couple of days or till the middle of the week, we can see gold trading with a slight bearish bias, achieving 1940, 1920, 1930, 1925 levels, possibly, and maybe a reversal from there can be expected. RSI has almost seen the top and trading comfortable now. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you for next week. And before we proceed to the strategy part, yes, if you want to learn the art of trading, you should join my mentorship batch. 24th batch is now going to start on first week of August. Remember, invest in your learning first, invest in the tools, techniques and strategies which you have gathered with the years of experience, which could definitely will help you become a profitable and proficient trader. Hence, join the mentorship batch. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Remember, we have only limited seats available, and hence it is purely on the first come first serve basis. Next is, you can also join my signals channel, where trading as per the signals you can definitely benefit. So first, for next week, let's talk about the levels to buy. I will recommend you to buy here at 1960 levels itself. Expect 1965-67 as the first resistance here, very good resistance. Then 1973 the next. Now see, as soon as it breaks beyond these levels, certainly the bullishness will increase here. Beyond this, we can expect 1984, and if it stays above 1984, this is going to increase the bullishness further and will take the prices till 2000 levels. And remember, this time if gold rises above 2000 levels, sky is the limit on the upside. I will be looking for 2018 and then directly to 2050 levels. Beyond that, sky is the limit. I am just keeping it open, and these levels are also applicable for the month of July from here onwards. Now on the sell side, where to sell? See, you can sell here at 1950, expect 1945, 1941, 19. Now see, beautifully everything is spaced within $5. 1930, all. Now see, the beauty of the levels on the downside, you can see how stronger the resistance zones are, and definitely it will require a lot of efforts for gold to break past each and every resistance here. This is going to be a cumbersome job for gold. Only thing is a data or a news which can take it in a single candle, else it is definitely going to be a difficult task. And then 1918 levels, remember, staying below this, then bearishness will increase. 1904, 1895, and then below this time if it breaks below 1895, definitely more bearish momentum is going to prevail. This time I will be looking forward to 1850 levels directly. It will take maybe few sessions, but yes, below 1895 just stay short, and we are going to look at 1850 levels also. Now see, we have to think of both the sides. We know that there are supports available on the downside. Now each of this till 1924, in fact 1918, very good support here exists here at these levels, and hence we have to ensure that till here we have to remain cautious and keep closing our trades there. And at this point also, if you see it reversing any point of time, you can take a buying entry here, because see, this till this time it will be buy the drop, and on the upside we know 73 and 84 levels, still here it will be sell the rise. But then you have to remain cautious, first buy here, get the profit, and only risk on sell whatever you have profited on the buy side. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Before leaving the video, just press the like button. Do share, subscribe and comment. Thank you very much. Have a great profitable trading day.